Imagine paying your insurance premium every month, only to wake up one morning and find your company has vanished from your state. No coverage, no renewal, just a letter saying, "We're no longer offering policies in your area." From California to Florida, America is facing an insurance meltdown. Major brands like State Farm, Allstate, and Farmers are pulling out of entire regions, leaving millions of people exposed. So, what's really going on? Let's unpack the truth behind why these companies are fleeing and why some homes in America are becoming completely uninsurable. It all starts with a perfect storm of extreme weather and economic risk. Wildfires in California, hurricanes in Florida, massive floods in Louisiana. Each event costs billions. The numbers don't lie. In 2024 alone, insured catastrophe losses soared past $120 billion, the second worst year on record. And honestly, insurance companies have had enough. When the risk is bigger than the potential profit, they don't fight it. They just leave. Insurance runs on a simple equation. Premiums in must be greater than payouts out. But when payouts explode, that math completely collapses. Take California, where wildfire claims since 2017 have surpassed a staggering $35 billion. Or Florida, where storm damage and a flood of lawsuits have tripled claim costs in just 3 years. Some insurers are now paying out $1.20 for every dollar they collect. That's not a business, that's just bleeding cash. California has become ground zero for this meltdown. After record wildfire seasons and skyrocketing construction costs, giants like State Farm and Allstate just stopped writing new home policies altogether. Why? Because state law puts a cap on how much they can raise premiums. So while their costs are rising in real time, getting approval for higher rates can take an entire year. Every new policy sold is a guaranteed loss. The result? The companies just walk away. Now let's head east to Florida, where home insurance premiums have soared over 40% in a single year. Hurricanes Ian and Idalia wiped out billions in claims, but that's not even the whole story. Florida is also facing a litigation epidemic, with thousands of lawsuits over roof claims and shady contractors. For every dollar lost to a storm, another dollar is lost in legal fees. Smaller companies are going bankrupt and the bigger ones are leaving. It's quickly becoming the most expensive state in America to insure a home. When the major players exit, it creates a domino effect. The smaller firms that are left have to buy their own insurance called reinsurance, and those costs skyrocket. Without big companies to share the risk, prices just spiral out of control for everyone. Homeowners are then forced to turn to state-run programs like California's Fair Plan or Florida's Citizens Property Insurance. But these insurers of last resort are already stretched thin. In 2025, Citizens hit 1.6 million policies, its highest number ever. If one more major storm hits, it could be the taxpayers who have to foot the bill. Even Wall Street is getting nervous. Investors used to love insurance stocks, but not anymore. They now see climate risk as the new mortgage crisis, predictable losses with no upside. As shareholders pull back their money, companies have no choice but to cut their exposure to high-risk states. It's not political. It's pure financial survival. The message from insurers is crystal clear. If a state won't let us price the risk properly, we won't sell our products there. Behind every premium increase is a bigger truth. Our climate is changing faster than the industry's math can keep up. Wildfires burn year-round, hurricane season feels like it never really ends, and 100-year floods are happening every 5 years. Insurers aren't denying climate change. They're accounting for it in their spreadsheets. The result is a new map of America. Green zones that are still insurable and red zones that are simply too risky to touch. So, what does this mean for you? If you live in a high-risk area, expect rising premiums or even non-renewal notices. But there are ways to fight back. Start shopping for insurance early, well before your state's seasonal risk peaks. Try bundling your home and auto policies to keep loyalty discounts. And invest in your home's resilience. Things like fire-resistant roofs or storm-rated windows can earn you a discount. Most importantly, know your policy. Standard plans usually don't cover floods or earthquakes unless you add them on. This insurance meltdown isn't just about companies leaving states, it's about a system hitting its absolute limit. When the risk becomes too high to measure, the market retreats. For millions of Americans, that means living on the edge without the safety net they thought they were paying for. And if these trends continue, we might face a future where insurance isn't a right, it's a luxury. If this video helped you understand what's really happening, hit that subscribe button. Thanks for watching and stay safe out there.